Many of us are invested in the stock market, whether as part of a retirement plan at work or an IRA, or perhaps just buying stocks and bonds to help our money grow. So whenever we hear there's a big gain or a big loss on Wall Street, we tend to pay close attention. On today's Healthy, Wealthy, and Wise segment, we are joined by Jack Lansing, a Vice President and Portfolio Manager for UBS Financial Services. Jack, hello, good to see you.
Good to be here.
All right, well, hopefully it won't be a financial storm on top of the storm that we're tracking out there. For the most part, things appear to be pretty positive out there, but can the markets keep going up when earnings seem to be somewhat disappointing?
It's a good question. If you look underneath the numbers a bit, in the first quarter, indeed, earnings were a bit disappointing. But since then, if you take out the energy sector, major international oil companies, actually earnings have been growing at about a 3% rate for the next 2 quarters, and we expect that to continue and probably grow at twice that rate next year.
Oh, that's fantastic.
Yes.
Well, I mean, people read a lot into the financial markets. Do they give us an indication about maybe who is going to be our next president?
Well, to phrase it, the markets are not factoring in a Trump victory currently. I think the expectation would be, because of that and a bit of uncertainty, you'd see some short-term choppiness in the markets, but we don't feel long-term it will have a major impact on the outlook for the fundamentals of the economy.
All right. Do you recommend to your clients that they stay fully invested or maybe get into cash, get on the sidelines right now until something happens?
Our outlook remains very positive, especially on the U.S. markets. So my recommendation would be, rather than going to cash right now, take a look at what you think are some of the so-called safe investments in your portfolio. If we get into a rising interest rate environment, which we expect, certain things will be a little bit more risky. You have high dividend paying stocks, such as your utility companies, things like that. Might be a good time to consider making some changes into other sectors.
All right. Is cash, just pure and simple cash, ever good?
It's not bad to have a little cash reserve right now. We don't feel it's necessary or a good idea. And also, we're noting too, be careful about some of your long-term bonds. If you 10-year Treasury bond close to an all-time high right now, and the real return after inflation is basically zero.
Okay. Yeah, that's not good. All right, Jack Lansing, VP with UBS Financial. Thank you so much for joining us today. Good information as always.
Thank you.
All right.